Right. It's come to my attention that the government branding of the Help to Buy scheme is very confusing. What you might think of when you hear Help to Buy is the Help to Buy ISA, which was discontinued last year and has been replaced by the Lifetime ISA. What this video is about the Help to Buy equity loan, which is where the government gives you an interest-free loan of a percentage of your property, which means that you only require a 5% deposit and you can take out a smaller mortgage, which makes your first property much more affordable. So, roll the tape. Hey guys, my name's Adrian and I am passionate about helping you to become more financially literate, to take advantage of the schemes that are in place and to make your money work for you. Help to Buy is a government-backed scheme to help first-time buyers own their own property. They do this by A, allowing you to only put down a 5% deposit, and B, loaning you 20% of the purchase price or 40% if you're in London. This is a complicated topic, but I'm going to try and break it down for you in simple, easily digestible chunks. So in order to use the Help to Buy scheme, there are a couple of conditions that you must meet. And if you don't want to meet these conditions or you can't meet these conditions, then unfortunately, the Help to Buy scheme is not for you. And they are that you must be a first-time buyer, it must be a new build property, and it must be under a certain value. Now, today, October 2020, that value is actually £600,000. But from April 2021, the government is introducing regional caps, which can be found here. So you can pause that and reference that later. So if you want to live in a new build and the new regional caps aren't going to stop you from doing that, then perhaps the Help to Buy scheme is one that you can use. So the other matter is the equity loan. So I mentioned that the government will loan you either 20% of the property purchase or 40% if you're in London. And now this is a loan that for the first 5 years is interest free, which means at the point of purchase and for the first 5 years, you won't owe the government anything. But from year 6 onwards, you start paying interest on that loan. Now, unlike a mortgage, you don't pay back some interest and some capital repayments, so eventually your mortgage is paid off. With the equity loan, you only pay interest, so you never actually skim off any of the money that you owe to the government. So in year 6, when the interest kicks in, you actually pay 1.75% interest on that loan that you've got. And then in year 7, you pay the 1.75% interest plus RPI, which is the retail pricing index, plus 1% more on top of that. So the RPI at the moment today is 1.1%, but in the last 9 years, it's fluctuated between 1% and 4%. Here's a table to try and explain this concept more clearly. In year 7, let's imagine that the RPI rate plus 1% equals 6. The interest in year 6 was 1.75%, and this then has a 6% increase. So that's 1.75% divided by 100 multiplied by 6, which equals 0.11, and then you add 0.11 to the existing 1.75 to get 1.86. What that means is that year on year, this interest rate goes up slightly, in this example by 1.1%. So you can actually reduce or clear the equity loan from the government in a few different ways. One, you can have a larger deposit. If you have more than 5% deposit, you can actually reduce the amount of loan that you need from the government. So you'd end up paying less interest because it's a smaller loan. 2, you can actually pay back the equity loan once you move in. You can only pay back in 10% chunks, which is, it's a huge chunk of money, but it is an option there. And number 3 is when you sell, you have to pay back the equity loan. What's really good is that the equity loan is a percentage of your house, not a fixed sum. So if your house increases in value, you'll pay the government back more. But more importantly in these times is that if your house decreases in value, you'd actually owe the government less. It's still only 20% of the sales price, or 40% if you're in London. So that's what the Help to Buy scheme is. It's a scheme to help people buy their first property with just a 5% deposit through a loan from the government, but one that you will have to pay interest on from year 6 onwards. And so if you have any questions about the Help to Buy scheme, please leave me a comment. If you have any experiences using the Help to Buy scheme, I'd love to hear from you. Please drop me a comment. If you wouldn't mind liking this video, that'd be awesome. And hopefully I'll see you guys in the next one. Cheers.